Welcome back to the channel, everyone. Today is Friday, July 3rd, 2026, and I want to wish all of you an incredible, safe, and happy 4th of July weekend. Because of the holiday, the U.S. stock markets closed down early yesterday and are completely shut down today. That gives me the perfect opportunity to step back, catch our breath, and look at what has been an absolutely explosive week in the market and a historic wrap-up to the first half of 2026. If you've been tracking the macro landscape, the first 6 months of this year have been incredible. The S&P 500 finished the first half of the year up a solid 10%. Think about everything the market shook off to get here. We fought through resurgent inflation fears, a major geopolitical scare back in March, and a massive rotation in market leadership. The tech giants took a bit of a back seat while mid-caps, small caps, and value strategies completely caught fire. In fact, just yesterday, the Dow defied the tech slowdown and rallied to hit a brand new, record-closing high of 52,900. It did that right in the face of cooling labor data, proving that this market has some serious underlying resilience. And that is the exact macro wave our portfolio is riding right now. In today's video, we are diving deep into our mid-year momentum. We'll look at a massive $13,800 weekly portfolio surge, break down the specific growth monster driving the move, read off every single individual dividend payout that cleared the ledger this week, and then look at our long-term projected cash flow broken down all the way to the daily level. Let's get right into the numbers. Let's start with the big picture performance in our main brokerage account. Going into this rolling window, the portfolio was sitting at $229,198.37. By the close of this shortened week, the account officially finished at an all-time high of $243,078.27. That represents a total net gain of $13,879.90 in a matter of days, driven entirely by pure market appreciation. Now, when you look at a $13,800 plus gain in a single week, you have to ask yourself, what exactly drove that massive boost? If you look right here at our holdings sorted by 1 week performance, it wasn't spread out evenly. It was driven by one absolute powerhouse growth monster in our portfolio, Palantir Technologies, PLTR. Look at these numbers. Palantir went on an absolute tear this week, exploding upward by plus 20.54% in just 7 days. That single move added a staggering plus $11,327 to our bottom line this week, pushing our total Palantir position to a massive value of $66,481.24. The stock officially closed at $129.30 per share. This is the ultimate proof of why we build high-conviction positions. Our average cost basis on these 514 shares is just $21.05, meaning our original cost of $10,823 has ballooned into a multi-bagger worth over $66,000. When the business is booming and the AI competitive moat widens, patience pays off. But as you guys know, capital gains are only half the battle. We build this machine for consistent, reliable cash flow. So look at the incredible list of payouts that did physically clear into the account Monday through Thursday. I want to read these off to show you just how diversified this cash flow is. On Monday, June 29th, we kicked off the week with Gilead Sciences, GILD, bringing in $7.59. Schwab U.S. Dividend Equity, ETF, SCHD, adding $14.36, and 3 separate payments from Main Street Capital, MAIN, for 30 cents, 69 cents, and a heavy-hitting $31.79. Tuesday, June 30th, was our absolute monster, BDC and Income Day. We received Capital Southwest, CSWC, paying out 4 separate times, 49 cents, $1.57, $1.62, and $5.22. Amplify CWP, Enhanced Dividend Income, ETF, DIVO, giving us 87 cents and $6.87. Vanguard Dividend Appreciation ETF, VIG, hitting us with $5.32. PepsiCo, PEP, dropping $7.94. Aberdeen Global Dynamic Dividend Fund, AGD, adding $8.94. Vanguard S&P 500 ETF, VOO, paying out $10.48. Simon Property Group, SPG, with a strong $15.36. Guggenheim Strategic Opportunities Fund, GOF, bringing in $17.41. Strategic Regulation Adjustment, STRC, adding $19.17. Vista Shares OMAH ETF, OMAH, with a massive $48.41. And the ultimate double payout from Ares Capital, ARCC, hitting the ledger at $56.16 and $72.49. On Wednesday, July 1st, the midweek momentum continued with Coca-Cola, KO, bringing in $5.90. Huntington Bank Shares, HBAN, adding $7.18. UGI Corporation, UGI, dropping $7.99. And a double shot from TAP Alpha, S&P 500 Growth ETF, TSPY, for $9.19 and $44.03. Finally, on Thursday, July 2nd, we wrapped up the working week with Yield Max Magnificent 7 Fund, Y-MAG, with two payouts for $15.23 and $22.93. Round Hill Innovation 100 DTE ETF, QDTE, bringing in $20.82. And Defiance S&P 500 Target Income ETF, SPYT, locking in $33.61. When you add all of those individual holding payouts together, it brings our total realized passive income for this 4-day week to a grand total of $499.93. We missed a perfectly even $500 week by literally 7 cents, but pulling in that much cash in hand while we sleep is exactly why we play this game. While tracking past weekly cash flow is great, looking at our long-term forward projections is where the real motivation lives. Let's pull up our analytics dashboard on the Track Your Dividends website. Our current portfolio yield is sitting at a very healthy 6.61%. But the real trophy metric on this entire dashboard is our yield on cost, which has officially climbed to an unbelievable 10.86%. That means because we bought quality assets at great prices in the past, we are now earning nearly an 11% return on every single original dollar we deployed. Because of that compounding power, our total projected annual income has officially hit $16,071. Now, I always love talking about our average monthly dividend, which is currently sitting at $1,313. But to get a really clear picture of how much this portfolio is actually shifting my day-to-day life, I like to break that math down even further. If you take that $16,071 annual projection, this portfolio is now generating roughly $309 every single week. And if you break it down to the micro level, this machine is paying me just about $44 a day, every single day, whether I get out of bed or not. Think about that. Waking up every morning and knowing the first $44 of your day is completely covered by your assets. That is how you buy back your time. Looking at the upcoming payout calendar, that forward consistency is a thing of beauty. Our highest peak month is scheduled for December 2026, where we will bring in $1,493. And even on our lowest, slowest month of the year, the income only dips down to $1,197. Having a baseline where your absolute worst month still pays you nearly $1,200 in pure passive cash flow changes everything. The dividend snowball isn't just rolling anymore, it's turning into a nice avalanche. Drop a comment below and let me know how your portfolio wrapped up the first half of the year. What does your current daily or weekly dividend average look like? Tap on that like button, subscribe to follow the journey in real time, and have a safe, fantastic 4th of July weekend. Keep grinding, keep compounding, and I'll see you in the next video.